Hi, this is Kirk with Forex Strategy Secrets. In this recording, we want to talk about a little bit about back testing. Does it really help, or does it have some merits, or is it just a waste of time? There is a place for back testing now, but it's limited in its effectiveness. You talk to a lot of brokers, and they say the information they give for back testing is not fine-tuned enough to give an accurate measure of what most people are looking for in testing, and doesn't go back far enough because they want to test on minute charts, and you're only going to get a few days or a week or two of information on the charts on a 1 minute chart. So, if you're looking at the past, trying to predict the future, well, you're probably not going to have a good experience. Because as we look at this chart, you go back and we see it goes up and down, up and down. We see it came up, went sideways for a while, gradually trickled up, not fast, then went sideways for a while, then did have a pretty good increase going up, then went into a channel for a while, and then had a great big drop, went back up, started going into some channels. So by looking at the market, it changes all the time. So back testing is not going to be able to predict what it's going to be doing in the future. No matter how much you want to test your indicators, they will work when the market does certain things, and they won't work when the market does other things. That's why we need the human intervention. That's why the human thinking and the decision making is so important. So really the best way to test is test something in the present and see what it does over the next week or two. That will give you a good idea as to whether your indicators are telling you the things that you need to know in order to be able to trade properly. There's a lot of traders spend too much time looking at the past and not enough time looking at the present, trying to figure out what the market's going to do right now. Most indicators are lagging indicators. Some people say that some are indicators that are leading indicators, but most of them are lagging indicators. And so the best way to figure out which way the market's going is to find the overall momentum in the market. Which way is it moving momentum-wise? And then find that momentum on a larger time frame, and then move to a smaller time frame. For example, let's move to this day chart. Now, right in here, we're right close to the present area. So as we were trading these areas, we pick the indicators that are going up if we feel like it's an uptrend on a larger time frame, and then go to a smaller time frame and time our entries. So let's take this part right here. It doesn't seem like a very big move, but it's about a 75 pip move based on a day chart. Took a couple of days to do it. Let's see if there are any indicators on a 4-hour chart. Well, there's one that happened prior. Let's look at the 1 hour. We see a good indicator here that the 1 hour said that there was some move up, and there was a good 50 pip move. And so that's how, if you're trading in the present, find the trend on a larger time frame, and then go to a smaller time frame to time your entry. And that's how you can use lagging indicators to be trading in the present. So you can go back in history and learn how to use indicators, but then use them in the present. Use a larger time frame to find the momentum, and then you can make a few demo trades and see how it works for you, looking for the entry on a smaller time frame. If you do this, yes, you'll have more success in your trading, and the market will actually tell you what it's going to be doing. Hope this video was of help to you, and good luck in your trading.